It's a platform for eminent thought leaders from industry and academia to discuss and debate contemporary issues in the field of information management, finance, operations and supply chain, marketing, and business analytics. Before we begin, we request all of you to switch off your cell phones or put them on the silent mode. And please continue to promote the event #Samavesh 2022 on social media through your posts and tweets. Thank you.
SPJIMR Institute of Management and Research, an integral part of Bharati Vidya Bhavan, was established in year 1981. The institute's mission has been to influence practice and promote value-based growth. A constant focus on the development of not just skill and knowledge, but also attitude and spirituality is critical to the learner-centric pedagogy at SPJIMR. The curriculum instills competition-based efficiency and collaboration-based ethos in all the participants.
PGPM is a one-year full-time residential MBA program aimed at accelerating the careers of participants with over 5 years of experience. The USP of PGPM is enhancing the functional and managerial capabilities of the participant with substantial corporate experience. It has a rigorous multi-stage admission process to select candidates with skill, expertise, and temperament to take future leadership roles. The program has state-of-the-art curriculum and instructors with rich experience in industry and academia and a combination of classroom and experience-based learning. These features develop well-rounded professionals who are ready to take up leadership positions in multiple industries.
The PGPM class of 2022 has participants from diverse backgrounds, all of whom have high degree of functional and domain expertise. This batch has 114 participants with average age of 29 years and average work experience of 6.5 years. We come from over 15 different industries and varied educational backgrounds. This inherent diversity brings rich opportunities for peer learnings that are critical in the development of skills needed to work in cross-function teams in Outworld. This year, Samavesh has 4 conclaves: Information Management and Business Analytics, Finance, Operations and Supply Chain Management, and Marketing. We have concluded the Operations Conclave earlier today. So let's begin the Finance Conclave. The topic of today's conclave is Fintech, Technology-Enabled Finance. Fintech, which originally referred to the computer technology applied to the back office of banks or trading firms, is now used to describe a broad variety of technological interventions into personal and commercial finance. Fintech, or financial technology, is used for the automation and betterment of the delivery and usage of financial services. Today, Fintech is utilized to help companies, business owners, and consumers to better manage their financial operations. This is done with the help of specialized softwares and algorithms that are used in the computer as well as your smartphones.
We now request Professor Hemant Manuj, Head of Finance and Economics area, to set the context for the conclave. Professor Hemant has over 2 decades in the industry experience and has worked with renowned organizations such as SEBI, Reliance Share and Stockbrokers Limited, Cholamandalam Kesnov Mutual Funds, IDFC Limited in prominent roles. Currently, he is an associate professor as well as heads the Finance and Economics Department in SPJIMR. Professor Manuj is BTech from IIT Dhanbad, an associate of the Institute of Cost and Work Accountants of India, a certified financial risk manager, and a fellow of IIM Calcutta. Over to you, sir.
So, warm welcome to all our dear students, and an even warmer welcome to our esteemed guests over here. It's a pleasure to kind of open the Samavesh finance part of the conclave with a few lines that I want to talk about. I won't take much time, frankly, because Fintech is now such a widely talked and discussed topic that I don't think I can add much to it in any way talking much about. And we have expert practitioners with us, so I would rather listen to them. Having said that, just 1 or 2 points I would like to make. These are more philosophical points, that one, while fintech we know, I mean, it includes all kinds of technological aspects, the blockchain, AI, VR, AR, all kinds of alphabetical soups actually, you know. So whatever we can combine. And on a more serious note, there is actually so much of scope, and there is actually so much of opportunity to use technology in various ways. So while we do that, the primary objective of any new innovation, any new activity that you will do, the primary objective or the primary question that we should ask, how is it serving the stakeholders? So I would be keen today to maybe pick up and learn a few tidbits, right, from our friends over here, the industry experts over here, on how is it impacting the stakeholders, various stakeholders, beyond the shareholders. Frankly, I'm least interested in the shareholders. Right? The reason being more serious, because shareholders is very apparent. I look at the, no names, but I look at the stock prices and I know what's happening to the shareholders. But we don't know what's happening to the other stakeholders. Right? So that is one thing I'm at a philosophical level. Second is in terms of challenges. I'm sure that will be definitely discussed. In terms of challenges, while fintech is throwing up a lot of opportunities, we are getting various kinds of application services companies based on fintech, payments, lending, deposits, all kinds of things, investments, wealth development, all kinds of, name it, and I mean, we have it. While we are having it, what are some of the challenges that we are facing? To my mind, one of the biggest challenges we are facing is the regulatory compliance actually. Regulations are, I should not say that, but regulations often overstretch, let's put it this way. Right? I would not use harsher words, but regulations at times overstretch, so killing the baby with the water. So I hope that sandbox approach is adopted and things are taken care of there. So that is the primary thing. And second thing, the related things like what, sometimes ignorance is bliss. We don't know whether our data is safe or not, but most of the consumers, that is where when I talked of stakeholders, most of the consumers, they don't even understand what is the meaning of, when you're, even in a normal bank, when your account is lying with the bank, all the data is lying with the bank, forget the real cash, real money. When your data is lying with the bank, how many of us explicitly ever think that whether that data is safe with the bank or it is getting passed or it is getting leaked somewhere? We don't think explicitly. But the fact is that it affects us. So I had heard one good quote sometime which stayed with me for a long time. They said, in terms of data privacy, in terms of being hacked into your, you being hacked, in terms of your data, you being hacked, there are only two kinds of people in this world, right? Either you have already been hacked, or you don't know you have been hacked, right? So it looks catchy, but it, it stayed with me for till date. It stays with me. That is the level of, we don't recognize it, but that's a fact. So how do we address that? So these are some of the things I'll be keen to listen. We have so many bright young minds over here, which I would also look forward, maybe I think as a part of our format, maybe last 5-10 minutes we keep it open for the participants also to ask some questions or put some views, So that will be again interesting. So with that I'll close it, I am more eager to hear and learn rather than, do much of talking, which as I said, started with saying I don't add much value. So thank you very much and wish you all the very best.
Thank you, sir, for setting up the context for the conclave. Moving ahead, we have a presentation from the participants of finance specialization of our batch. The participants are Akansha, Nidhi, Nandita, and Ayush. They have put together a presentation on the topic Fintech Technology-Enabled Finance. let me take a moment to introduce our participants. Akansha has 5.5 years of work experience as an officer in Foreign Exchange Department in Canara Bank. Nidhi Nagwekar, she has an experience of 6.5 years in real estate project financing and was associated with organizations such as Lodha, Runwal, and Godrej Properties. Nandita has work experience of 6 years and has worked in Cognizant and State Bank of India. Ayush is a chartered accountant with 5 years of experience as a credit and risk analyst in Aditya Birla Finance and Profectus Capital. Let's hear their views on the presentation.
Thank you, Shivangi. Good afternoon, everyone. Before we deep dive into the world of fintech, I would like to set a context of fintech industry for the audience. Fintech is no longer a newcomer. While 2008 recession was the catalyst that sparkled the technology's first innovation, it did not take long for the new breed financial institutions to structurally disturb the banking as usual ecosystem. Traditional banks and financial institutions perceived this technology as an enabler to business proposition rather than business proposition themselves. Fintech companies, however, are changing their role by leveraging technologies to create business propositions and targeting new market segments which were traditionally not possible. Armed with advanced data and analytical capabilities, asset-light platforms, and almost zero processing cost, fintech companies are complementing and even challenging the traditional banking system. Fintech, in the truest sense, is the application of technology to offer financial products, services to new market segments in an economically viable way. Hence, fintech has increasingly become an important focus segment for the finance sector. And this is evident from the global numbers and global growth data points. The current global market size of fintech is $112 billion US and is anticipated to grow at a CAGR of 25.14% over the next 4 years, taking the market value to approximately $324 billion by 2026. 2021 had been a remarkable year for fintech market, with a record number of deals in all major regions. Fintech investment was incredibly strong, with both VC and PE investments growing to record highs. The breadth of fintech solutions attracting investment continue to expand and grow, with surging interest in cryptocurrency, blockchain, wealth tech, and cybersecurity. Looking across 2021 as a whole, there is a strong sense of renewal, with numerous trends working together to drive both established companies and startups to reimagine what financial services mean and what it will be likely to look in the post-pandemic era. On the global map, North America commands the highest market share in the fintech industry, with Asia and Latin America being projected to be the fastest growing regions. The digital payment market is the largest segment within the fintech spectrum and accounts close to 80% of the global fintech revenue. Now let's deep dive into the Indian fintech market. Traditionally, Indian finance sector is characterized by brick and mortar banks, labor-driven banking services, manual and paper-based processes with limited straight thought-through processing despite continuous investment in the technology by the banking sector. Hence, there's a very high degree of customer friction in the areas of customer onboarding, KYC, and branch banking services. This inefficiency in the system presents an inherent opportunity for the data-driven fintech companies in reducing the cost of acquiring and servicing the customers, eventually leading to greater penetration of financial services in the market. India remains one of the largest markets where the structural enablers to set up and incubate fintech has come together, and of course, at an apt time. A combination of steady economic growth with low penetration of financial services, availability of supporting infrastructure such as data access, smartphones, along with utility infrastructure including Aadhaar-based authentication, and India's stark capabilities are likely and are providing the required impetus to Indian fintech sector. Hence, the adoption rate in India is 87% as against the global adoption rate of 68%. Fintech industry in India currently stands at the valuation of $31 billion and is expected to grow at a rate of 24.57%, reaching a value of $150 billion US. So next we see how the fintech industry is categorized. There are many ways to do it, one of which is the user-based category. The major categories in this are B2B in banking and finance institution, business clients of financial institutions, B2C for small businesses, direct use by consumers. Now my batchmate and friend Ayush Agarwal will take you through the fintech in B2B space.
Thanks, Nidhi. Now we move to the B2B platform lending, which is the B2B lending segment. In a traditional lending, there are multiple to and fro movements between the relationship manager and the client for the documents and information required for the assessment, leading to the possible timelines of more than a week. Fintech industry has transformed the entire lending process. Today, we can have an end-to-end transaction within an hour. In the last 10 years, India has seen over 3,000 fintech startups. Banks and NBFCs have an option to either build their own platform and transact or partner with fintech companies that offer platform as a service and transact on those platforms. This is a brief of how owned platforms operate. They are known as platform operating lending business. The borrower has to digitally apply on the fintech platform by filling in their details such as KYCs, company details, borrower details, and upload their bank statements and other key documents. A video KYC is also conducted to cross-verify the applicant. Once the applicant authorizes the platform or the bank to access their information from various sites, the API linked fetches the data from those multiple sites and provide the lenders the financial statements, the bank statement analysis, credit scores, and various other risk reports. This is done in the background as the applicant is asked to fill in other key details. While the applicant is filling in the other details, there is an initial checklist set by the lender for various parameters, and if the applicant doesn't fit in those parameters, the platform asks the sales manager to take the case offline or rejects the applicant. If the system approves the application, the entire set of documents and the information, the reports flow into the underwriting team of the lending company. Those underwriters then analyze the entire case and makes the final decision. This decision then gets popped up on the screen of the borrower, and if he is fine with the rate, the loan amount, the tenure, and the other conditions, they can go ahead and complete the loan formalities. This is the platform, B2B platform services. Fintech companies also has an option to offer their platforms wherein they have registered borrowers with post their background checks and lending partners which have partnered with them to access those platforms. These lending partners can access these platforms and see all the applications side by side. Once the borrower applies, all the lenders view those applications and process the applications basis their respective parameters. After decisioning from those lenders, the borrowers can go ahead with their favorable offering. The earning opportunity for the platform is the commission from the lender and a part of the processing fees that the borrower is paying. For the lender, the earning opportunity is the interest and the processing fees paid by the borrower. Companies such as Lending Card, Incred, Indifi, NeoGrowth, Flexi Loans, and others have built their own platforms and created a healthy portfolio within short span of time. Companies such as Signsy, Credex, InvoiceMart, Orowealth, TradeCred, etc. have built their own platform and providing those platforms as a service for the other companies. And they have grown good. Akansha here would take you guys with other segments that the fintech operates in.
Thank you, Ayush. Moving forward, we will be discussing the segments of the fintech industry. Technology-focused startups such as Upstock, MobiKwik, and Credex have been providing financial services that were earlier provided by banks only. Based on the type of services provided, we have classified the fintech industry into 5 segments, namely digital investment, digital payments, neo-banking, cryptocurrency, and alternative lending. So as we move forward with our presentation, we will be deep diving into each one of them. Our first segment, that is digital payment. With the advent of financial technology, the financial institutions are no longer required to provide basic financial transactions. Globally, this will result in almost 80% of the revenue loss to these financial institutions. So, in order to remain relevant and compete in this digital environment, they need to upgrade themselves and reinvent themselves from being closed-loop institutions to being open and collaborative ones. The major key drivers, there are 3 major key drivers of digital payments, namely technology drivers, customer demand drivers, and regulatory drivers. Now coming to technology drivers, we can look up to startups such as Civil. Civil uses blockchain technology to store, regulate, and retrieve KYC details of the investors. So once the KYC details of the investors are upgraded in the Civil platform, they need not produce the KYC documents again and again. Similarly, there are startups such as Paytm that uses cloud-based services for detection of fraud. So they need for the detection of fraud, so thus eliminating the trade-off between fraud prevention, user experience, and user privacy. Similarly, companies such as Amazon Dash are using technologies such as Internet of Things and artificial intelligence to redefine the way people make payment on their day-to-day transactions. Our second key driver of digital payment is customer demand. Customers are accustomed to a highly interactive and personalized user platform such as those offered by Google and Amazon. And they are expecting the same from payment platforms as well. Some of the payment platforms have already started providing customized services like offers based on the past consumption and buying patterns. Our third key driver is regulatory drivers. It refers to the government initiatives that aims towards encouraging players to invest in digital payment solutions. Moving forward, our second segment of fintech is alternative lending. The concept of alternative lending arose after the 2008 financial crisis when banks started refraining from lending to small businesses. In India at present, there are around 1,000 alternative lending startups, including major ones such as Lending Card and Credit Avenue. There are 3 major prerequisites of an alternative lending startup. Firstly, a robust alternative credit decisioning model. So at present, banks are basically relying on CIBIL score to decide whether to lend to a customer or not. But many small businessmen have poor CIBIL score and they are completely eliminated from the lending process. So what these alternative lenders do is that they arrive at an alternative credit score based on after analyzing the past digital transactions such as utility bill payments, mobile bill payments, and water bill payments. So after analyzing these digital transactions, they try to analyze the behavior and repayment intentions of the client. Our second prerequisite for alternative lending is customized product. So the credit requirement of an IT professional will be very different from a credit requirement of a grocery shop owner. So what alternative lenders do is that they use market research and data analytics and design their products based on the type of merchant and their unique funding cycle. Our third major prerequisite of alternative lending is user-friendly infrastructure and delivery channels. So one of the major challenges that we customers face when we visit a bank for loan is the lengthy documentation process. These alternative lending apps provide a hassle-free and transparent process that ensures higher customer engagement and retention. Moving forward, Nandita will take you to the next segments of fintech. Thank you.
What is cryptocurrency? A cryptocurrency is a digital or virtual currency that is secured by cryptography, which makes it nearly impossible to counterfeit or double spend. Cryptocurrencies are decentralized networks based on blockchain technology. The predefining nature of cryptocurrency is that generally they are not issued by any central authority, rendering them immune to government interferences or manipulations. Let's look at what are the keys to the market development of cryptocurrencies. Coming to the consumers and merchants of cryptocurrencies offer cheaper and faster peer-to-peer payments, whereas traditional money services offer them payments which are costlier than what cryptocurrencies offer. While cryptocurrencies continue to gain the acceptance because of price volatility and the opportunity for speculative investments, consumers are interested in more in trading cryptocurrency rather than using it for payments towards goods and services. Technology developers. The cryptocurrency market has attracted talent which is needed to take the industry to the next level. Also, the industry is more focused on cybersecurity, technology, and protocols. Investors. Investors are more confident about the opportunities being provided in the cryptocurrency market. A recent report states that India has the highest population of cryptocurrency owners amounting to around 10 crores. As a result, some of the established cryptocurrency organizations have attracted institutional investors and Wall Street attention. Coming to the regulators, government attitude towards cryptocurrency around the world towards classification, treatment, and legalities involving around the cryptocurrencies, government has always been indifferent towards it, but regulations are being evolved at different paces in different regions. Now, let's focus on digital investment. When WealthTech comes in response to the convergence between digitalization and the investment and wealth management sector. The ways in which the assets of individuals and companies are being handled right now is far from what it used to be decades ago. The democratization and extension of certain type of services due to the online boom has meant that tasks and processes which are exclusive to investment managers previously are now being done by ourselves. We are able to do it ourselves. And that is because of the intuitive digital tools and that is being provided by innovative startups. What are the offerings of WealthTech? WealthTech offers investment tools, digital trading platforms wherein we can trade real time, irrespective of our background and qualification. There are robo-advisors that offer automated planning services with no manual intervention, and there is digital wallets as well as algorithmic trading. What is the next big trend of 2020 in digital investment? It is the increasing importance of data and AI. As digitalization accelerates, wealth managers will be able to gather more data of the customers, like their investing habits, what their goal is, and accordingly, and they have more access to external data as well because of APIs and open banking initiatives. With all this extra information at their disposal, they can feed this extra information into the AI and understand the customer needs accordingly and serve hyper-personalized and tailored advice to them. Additionally, it can extend the capabilities of advisors so that they can better assess trends and leverage actionable insights. Now let's focus on neobanking. Neobanking is nothing but a digital bank without any physical branch. Neobanks, the predefining nature of neobank is that they don't have a banking license, but they count on banking partners to provide bank licensed services. What are the advantages of neobanking? They provide hassle-free account creation, seamless international payments. When you go to a traditional bank, it is very cumbersome when you have to do an international payment. You have to go through a lengthy process and you have to pay extra charges and all. Whereas neobanking has adopted a universal transfer rate for all its payments and upgrades, keeping the process hassle-free and adaptive. Coming to smart reporting, Neo app provides you with an overview of your expenses and a savings goal, which can be customized according to your needs. And because India is making strides towards financial literacy, new banks can help us bank the underbanked and unbanked population. What are the drawbacks of neobanking? There are regulatory hurdles. RBI does not recognize entirely virtual banks and does not regulate neobanks. Limited services. Since neobanks don't have a banking license, they cannot offer all the services that are being provided by the traditional banks. And security. Since neobanks are 100% digital, it is making them susceptible to cybersecurity threats. Finally, I want to conclude this by saying that thanks to fintech, it is not about who is the larger player in the market, it is more about who is the fastest and who is the most responsive to the ever-changing customer needs. Additionally, the solutions offered by fintech are no longer one size that fits all. Instead, they understand the customer need and cater according to the customer at lower charges than being offered by the traditional financial providers. Thank you.
Thank you, Nidhi, Ayush, Akansha, and Nandita for presenting fintech opportunities in India and various segments where fintech has penetrated and enabled the entire ecosystem around it to grow. Let's give them a big round of applause again. We will now begin our panel discussion, and I would like to invite our panelists for today's panel discussion, Mr. Manish Daswani, Mr. Gaurav Varshney, Ms. Tanushree Bagrodia, and Mr. Khilan Haria. I would also like to invite our moderator, Professor Manoj Mohan. I request you all to please come on the stage and take your places, sir. Ladies and gentlemen, I take this privilege to introduce our panelists. Starting from the left, we have Mr. Manish Daswani with us. He is a payment industry professional, specializing in corporate payments and receivables, cash management, and commercial cards. In a career spanning over 19 years, he has worked in roles across product sales, product management, and consulting. He is currently Senior Director at Visa and heads Visa's commercial card business for India and South Asia. Prior to Visa, he has worked in transaction banking roles with global functional institutions such as Bank of America, HSBC, and Citi. Manish completed his MBA in 2003. It's a pleasure to have you on the panel, sir. Our next panelist is Mr. Gaurav Varshney. He has a long stint of around 16 years in banking sector. He has worked with major Indian private banks like ICICI and IDFC First and several MNC banks like Deutsche and HSBC. Before joining Paytm, he managed the business product for merchants ecosystem from offline to online merchants. Sir, it's an honor to have you on the panel today.
Our next panelist is Ms. Tanushree Bagrodia. She is a recognized thought leader and has created differentiated models in the field of finance to enable complex business in varied environments to succeed. Consistently being voted as a leading CFO, in India, she has extensive experience in Asia and Europe across financial services, manufacturing, and new age businesses. She became amongst the youngest professional CFOs in India in year 2013. As she transitioned to NRB Bearings as a CFO and VP IT. In April 2022, she moved to increasingly nationally important sector of specialty chemicals, joining Laxmi Organics Industries as CFO. She has done her MBA in business management from INSEAD in year 2003. It's a pleasure to have you here, ma'am. Our next panelist is Mr. Khilan Haria, Head of Product Payments in Razorpay. In this role, he leads the product management team with a marketing direction and strategic vision for Razorpay's payment products and solution set. Prior to this role, he led the product management roles at T-Box, Yahoo, and Tigle.com. Khilan has made significant contribution over his 10 years of experience across startups and multinationals in driving products from concept to launch. Khilan started off as a software engineer at Cisco and led development teams for high-priority cross-function projects. He has done his PGPM in marketing and strategy and leadership from Indian School of Business. I welcome you to Samavesh, sir. It's a pleasure to have you all here.
I would now introduce our moderator for today's panel discussion, Mr. Manoj Mohan. He is an Executive Director of Center of Financial Studies at SPJIMR and have close to 2 decades of experience in the corporate world and exposure to a variety of industries as a banker with expertise in business strategy, credit, financial structuring, capital raising, and institutional sales. He has undertaken varied roles in the investment banking team as a transactor and later on as a lead for several high-profile transactions. Thank you, sir, for being here with us today, and I request you to take over and start the panel discussion. Over to you, sir.